everyone. Welcome to our webinar session. Let me just introduce ourselves. My name is Shavir. I manage the equity funds here at JS Investments. With me is the head of research at JS Investments, Mr. Sarosh Pahor. And with us co-hosting this session is Mr. Hassan Raza, who is the head of product development at BSX. Without further ado, I think we should let's commence with the presentation. So today's presentation is about introducing the first smart beta ETF in Pakistan. It will be called the JS Momentum Factor ETF. We intend to launch it on Friday, it's 7th of Jan. And general discussions will revolve around what exactly is a smart beta ETF, how are these ETFs constructed, and how do they, what sort of objectives can investors aim to achieve from being invested in these ETFs. So we've divided the presentation in four different categories. Primarily, the first two are a bit generic, where we will discuss smart beta investments and how they've been adopted internationally in different markets. And the second and the last two categories would be specific to our ETF that we're intending to launch. So now I think let's move on to the next slide. So I think we'll start off by introducing and defining what exactly a smart beta strategy is. So generally, smart beta and ETFs, all ETFs generally have a blend, or you could say they give you the best of both worlds in terms of investment styles. So generally, there are two sort of investing styles. One is called active investing, and the other is passive investing. And in active investing, investors are generally are engaged in ongoing buying and selling, and they try to capitalize on every mispricing opportunity that they get in the market in the short term, and they tend to benefit from short-term fluctuations in the market. Whereas passive investing is more of a buy and hold strategy, where investors identify mispricing or identify undervalued securities and just invest in it unless they achieve their respective fair values or respective target prices. So what essentially an ETF does is it gives you the best of both worlds. And what essentially a smart beta strategy ETF does is it gives you the benefits of active investing and the benefits of passive investing. So the benefit of active investing that you get in a smart beta strategy is that it involves regular rebalancing of the portfolio, which is basically active management of the portfolio, as opposed to some static ETFs, which have just a defined basket of like 7 to 10 stocks or 15 stocks, and those stocks remain the same throughout the year for the next 6 months. So with a smart beta strategy ETF, you do get active management in the sense that there will be frequent rebalancing, and there will obviously all the market dynamics will be taken into account. As far as the passive investing is concerned, the benefit from passive investing is that generally it's very easier to invest in ETFs. They are listed just like any other security on the stock exchange, and anyone with a brokerage account can just go and buy the shares of the ETF, or they can sell the shares of the ETF. And generally, they are considered to be low cost. So these are the benefits of, you could say, as the slide says, that this is a perfect blend of active and passive investing. The smart beta factor that comes into the ETFs is when we talk about factors. So every smart beta strategy is driven by a specific predetermined factor. In our case, that factor is momentum, which we will be discussing in the later slides in much more detail. But what you guys need to understand is that it is a rule-based system, and there is a predetermined factor that will determine how the portfolios are rebalanced going forward. But I think you'll get more clarity as we move forward. So let's discuss factor investing and what really factors are. So factor are basically a characteristic that dictate market movement, or you could say a driver that would dictate market movement. So like, as you know, we've stated in the table as well, you can see there are a lot of macroeconomic factors that impact market. There are a lot of style factors that impact markets. So economic growth, inflation, emerging markets, all of these factors are all of these factors or drivers do impact market sentiment or do impact market direction. And at the same time, there's a style sort of factor which includes momentum and quality and value and volatility as well. So all of these are characteristics through which you premise your investment strategy. So the one we've chosen is momentum. So let's move on to the next slide. I'll explain. So the benefits of smart beta investing or factor investing is that you do get a broad choice of investments, because there are several different factors that you can use. So, for example, I can invest in invest in an ETF which endorses high dividend yielding stocks, and at the same time, I can invest some portion of my ETF in a highly cyclical stock. So, like high growth could be one factor, high dividend yield could be one factor. So it gives me a broad choice and gives me a diversification in terms of portfolio management. Costs are generally lower for ETFs as compared to open-end mutual funds. Management fees globally are, and this is the standard, that management fees are generally lower because they do have a blend of passive investment in them as well. And the major portion of and the major, you could say, differentiating factor in factor investing is where it instills discipline, because as I mentioned before, it's a rule-based system. So a lot of human factor or human biases are completely eliminated. So I mean, we've seen. We can move on to the next slide, and I'll just explain a bit about human biases. So, I mean, human biases do exist, and when investment philosophy or investment strategy is concerned, and we've generally seen that there is a concept of losses loom larger than gain, where the concept is that the pain of losing is much larger than the reward of gaining, and we've seen that factor does exist in markets, and it can potentially lead to inefficient decision making, which is obviously an integral part of your investment process as well. So what essentially smart beta strategy does is it eliminates all of those human biases, which could also include a very common human bias, which is called price anchoring. We see a lot of investors, and especially retail investors, who anchor prices of different stocks. Let's say a stock has risen from 80 to 100. So a lot of investors would be very reluctant to invest into the stock at 100 rupees, although it might go up to 150 later on. And similarly, on the downside, when the stock goes from 100 to 80 rupees, a lot of investors would tend to buy that share because it's come down. So the price has been anchored at 100, but there could be potentially more downside in that stock. So what essentially the smart beta strategy does is it eliminates all of those human biases, which can potentially be damaging. Let's just discuss our factor, the factor that we're going to be implementing in our smart beta ETF. So our factor is momentum, and it is a very commonly used word in our market, especially. It's a very common terminology, and we have seen that momentum does exist. It exists in daily life, and it does exist in financial markets as well, as it's obviously financial markets are also reflective of market sentiment. So just to briefly explain, momentum is basically betting on something to repeat itself, betting on a trend to repeat itself. Let's say there's a race between three people, and halfway through the race, person A is winning. The momentum is in person A's favor, and the law of momentum would state that that person would go on to win the race. So that is momentum, and we've seen that it does exist in our markets, especially during boom economic cycles. And that is our factor. That is the factor that we've chosen for our investment strategy. What essentially momentum does is, like I discussed before, it also eliminates the price anchoring element of human intervention. Like, for example, a lot of people, as I mentioned, are reluctant to invest in stocks that are consistently going up, that have been on upper circuits for 2-3 consecutive days. But that is not necessarily an efficient strategy, because if a stock has gone up from 80 to 100, it can go to 120, 130, 140 as well. So that is some gain that you're missing out on. So momentum eliminates all of those factors. We can briefly just discuss the benefits of investing in momentum. The first one is capturing consistent outperformance. I think we'll be discussing exactly how we will be identifying our securities in our portfolio. So that's going to be the second part of the presentation. But generally, what momentum does is it allows you to capture those stocks that are doing well and eliminate those stocks that are doing bad. And the momentum, like I mentioned before, it has a lot of existence during economic expansion cycles. So we've seen that the Pakistani markets Pakistan Stock Exchange itself has a repeating cycle in terms of when there's an economic expansion, we do see a boom in our markets, and when there's the economic slowdown, we do see that activity generally slows down and markets do tend to come down. So in order to take advantage or capitalize on that economic expansion, I think momentum is one of the best strategies in our market, especially. And for the last benefit, it would be rules-based decision making. I think we've discussed this before as well. included some international ETFs, international momentum ETFs that have been adopted globally. So we just include some performances. You can see that there's Invesco DWA Technology Momentum ETF. It has done well against the benchmark. You can see the MSCI Momentum ETF. It has outperformed the S&P 500 by an annualized 5.3% over the past 10 years. So it's not just that it's a local phenomena, it is an international phenomena. Momentum does exist, and if taken the right approach, it is possible to take advantage of momentum efficiently. We're going to be discussing the JS Momentum Factor ETF now, so I think Sash, you can discuss this factor.
All right, so now begin with the second part of the presentation. So we'll basically explain what the JS Momentum Factor ETF is, how we construct our index, and basically how the product functions. So this is basically a brief on the product. We're basically launching on January 7th, basically this Friday. What we've essentially done is we've started off with the KC All Share Index, which includes around 540 or so stocks. Then what we've done is, considering that our market tends to be quite illiquid compared to some international markets, what we've done is we've placed some initial filters on the KC All Share. So we have two filters. The first one is basically a market cap filter. So what this does is this eliminates those companies that are very small on a market cap basis. So the idea behind this is that we want an index that is easily replicatable for the ETF, and also an index that has minimum tracking error. So in order to achieve that, we've eliminated companies that have a very low market cap. The second step is that we've implemented a traded value filter. So what this does is that it eliminates those companies that have passed the market cap filter, which are not sufficiently liquid. So we have a lot of companies on the stock exchange that have a very high free float market cap, but despite that, they tend not to trade. You even have a lot of sectors that generally don't have a lot of activity. So I think the sugar sector is one example where you have decent market caps, but generally don't see much trading activity. So once you pass the KC All Share Index through these two filters, you basically have a shortlisted number of stocks that meet our market cap criteria and that also meet our trade value criteria. Secondly, then what we're doing is that we are implementing these filters on a biannual basis. So this would be implemented on the 30th of June and 31st of December. So essentially, on the 30th of June 2021, we run the filter and we come up with, let's say, 100 to 200 stocks that pass both filters. So this would be your shortlisted number of stocks for the ETF index. And then this list would change every 6 months. So you would have a new list on 31st December, and then again, you would have a new list on 30th June. Then the second step in the process is that we track price momentum for these stocks, and we also track average trade value per day for these stocks. We have our own formula based upon which we compute a momentum score. So what the momentum score does is it captures both characteristics of the stock. So it captures price performance on a consistent basis, and it also captures trade value. So again, what we're trying to do here is we're trying to avoid stocks that basically have price performance but do not trade significantly. And conversely, we're also trying to avoid stocks which have a high trade value but generally do not perform. So once we compute our momentum score, we basically organize these stocks that have been shortlisted based upon their scores. And then we pick the top 10 stocks in the next step that are basically the final stocks for our ETF. So as I mentioned, the initial two filters are basically run on a biannual basis. The ETF itself is rebalanced and reconstituted on a 30-day basis. So every 30 days, you would rerun the momentum score on the shortlisted number of stocks, and you would come up with 10 stocks that scored the highest on momentum and trade value. And then these stocks would be held in the ETF for the next 30 days. On the 5th working day of the next month, then again, you would have a rebalancing and reconstitution. So, and then in this sense, I would say the current ETF is a bit different from the ones that we currently have on the Pakistani market, in the sense that those generally have a quarterly or biannual reconstitution. So our index would be continuously changing over the course of the year. So you would have 12 reconstitutions, and potentially you could have 120 different stocks that could be held in the ETF. So the advantage that you have over here is that you're not investing in a static index, which is being run for a year or 6 months, and instead you are basically holding a portfolio which is quite dynamic in its nature. And at the same time, from the investor's perspective, the approach is quite passive, because you essentially just have to buy the JS Momentum Factor ETF and hold that indefinitely. In the table below, we've basically shown what the growth of PKR 10,000 would be if it was invested in the ETX in 20 years from today. So in the column on the far right, you can see that 10,000 invested in the ETF 20 years back would have basically resulted in a return of 894,000 rupees, which is roughly 9 lakh rupees. And similarly, the KC All share, if you had replicated the KC All share, would have given you around 300,000 rupees. So there's a basically 60 times difference between the returns of the momentum factor strategy and the KC All share index. So this is basically based upon our backtest, which runs from 2001 till 2020. Similarly, you have outperformance over a 1 year, 3 year, 5 year, and 10 year basis. So on a 1 year basis, the outperformance is around 30.2%. On a 3 year basis, the outperformance is 53.4% cumulative, which translates into around 15% annualized outperformance. Similarly, you have 5 years outperformance of 27% and 10 year outperformance of 484%. All right, so I'll just briefly go into the backtest that we have run on the ETF. So essentially what we've done is that we've taken the strategy that I just explained, and we have rebalanced and reconstituted the theoretical ETF over the past 20 years. So you have 12 rebalancings a year multiplied by basically 20 years of stock price data. The data is basically based upon a total return prices. So those incorporate rights shares, bonus shares, and they are adjusted for dividends as well. So what we've seen is that over that 20-year time period, the momentum strategy delivers a return of 25% annualized, whereas the KC All share returns 19% annualized. So you have a 6% annualized outperformance over the KC All share. If we look at the Sharpe ratio as well, the Sharpe ratio for the ETF is 1.59, whereas the Sharpe ratio for the KC All share is 1.25. So even on a risk-adjusted basis, the return is much higher. Out of the practicing that we've done for 240 months, the strategy generally outperforms on 51% of those months. And the average outperformance in those months is 5.1%, whereas the average underperformance in the remaining 49% months is around 3.4%. So not only does the ETF do better most of the time, it generally has a higher return when it is positive than it does when it underperforms. So this basically explains the strategy again in a more textual format. Essentially, that you have 6% outperformance, and we've tested this on a 30-day basis, on a 60-day basis. We've even tested on a 180-day basis, but we've opted to go for the 30-day rebalancing and reconstitution since that is the most effective in terms of return and on a Sharpe ratio basis as well. So you have 122 months of outperformance, which is around 51%, and on those months, basically, it does better by 5.1%. This basically shows the performance of the ETF in a graphical format. So the fund that you see is basically the backtested strategy for our ETF versus the index, which is the KC All share. And what you would generally see is that the ETF does better than the index in those years when generally you have economic expansion in the market as well. So if you look at 2004, 5, 6, and 7, that is a time period that the ETF did really well. I think you can't really see that very clearly in the graph because of the base effect, but the outperformance during that period is significant. Then you have 2009, 10, and 11, where the market was more or less flat and you did not have much outperformance or underperformance. And then if you look at the ETF after 2012 up to 2017, similarly, it has done extremely well. And even recently after COVID, when you had when the market went down significantly, since then, as the market has come up, the ETF has done extraordinarily well. Finally, for any questions on how to invest, basically the ETF will be listed on the stock exchange like a regular stock. So for those concerned, you can basically purchase it through a brokerage account of your choice. And the par value for the ETF is 10 rupees and the minimum lot size is 500 shares. So essentially 5,000 rupees is the minimum that you can invest in the ETF. So I'll just share one final video on the ETF and then we'll basically open it up for Q&A.
So that's about it from our end. I think, Mr. Hassan Raza, if you have anything, if you want to add something, then the floor is yours.
Yeah, thank you very much. It was a great introduction to a new sort of ETFs in Pakistan. And for the benefit of audience, I would like to say a few things about ETFs in general. And इसमें we have done many webinars on ETFs, and most of people would be aware of ETFs. ETF क्या होते हैं, कैसे काम करते हैं, पोर्टफोलियो है, इनकी एक इंडेक्स होती है. So instead of going through the whole detail, I would suggest, because कोई भी investment करे, किसी भी चीज में करे, they need to understand it first before they make an investment. किसी भी चीज को जब तक समझ में नहीं आए उसमें इन्वेस्ट नहीं करना चाहिए. तो इसको ETF एज एन इंस्ट्रूमेंट आप जरूर इसको स्टडी करें कि ETF क्या होता है, कैसे काम करता है, एंड देन यू इन्वेस्ट इन ETFs एज वेल. इसमें एक चीज बिफोर आई गो अहेड विद ए ब्रीफ इंट्रोडक्शन ऑफ ETFs, कि ETFs भी आपको वही टैक्स बेनिफिट देंगे जो आपको म्यूचुअल फंड्स प्रोवाइड करते हैं. So if you invest for 2 years period, उसकी details AMCs can provide you with better details. तो अगर आप इन्वेस्ट करते हैं 2 साल के लिए, तो आपकी टैक्सेबल इनकम में उसका इम्पैक्ट आएगा, उसको कम करेगा. तो उसको भी जरूर देखिए. इट्स द सेम बेनिफिट दैट म्यूचुअल फंड्स है. ETFs एक नया इंस्ट्रूमेंट है एज कम्पेयर टू द इन्वेस्टमेंट हिस्ट्री. It started in 90s from Toronto Stock Exchange, Canada, जिन्होंने TIPS 35 शुरू किया. फिर then Spider आया, S&P 500. फिर मुख्तलिफ कंट्रीज ने आहिस्ता आहिस्ता इस कॉन्सेप्ट को कैच किया, जो म्यूचुअल फंड्स की ही एडवांस्ड एक फॉर्म है. हमने कुछ डेटा देखा, हमने शेयर किया. आपसे मैं रिक्वेस्ट करूंगा कि आप PSX की जो फेसबुक है या वेब पेज है, उस पे पुराने जो हमारे वेबिनार्स हैं ऑन ETFs, उसको ज़रूर आप देखिए. इफ़ यू हैवंट सीन वन, उसमें डिटेल से हम ETF कैसे काम करता है, इसका स्ट्रक्चर क्या होता है, उस पर हम ने डिटेल से बात की. दैट विल बी वेरी हेल्पफुल फॉर यू. तो ETF इस वक्त अगर आप देखें तो दुनिया में 50 से ज़्यादा ममालिक में ETF हैं. तकरीबन 8 से 9 हज़ार ETFs हैं. ओवर 7 ट्रिलियन इनका AUM है. US इसमें ऑन टॉप है. US में सबसे ज़्यादा ETFs हैं. और ग्लोबली अगर आप देखें तो तकरीबन ये बढ़ता हुआ ट्रेंड है एसेट अंडर मैनेजमेंट का, जितने उसके अंदर है. इसमें डिफरेंट टाइप्स ऑफ ETFs होते हैं. इक्विटी के भी हैं, फिक्स्ड इनकम पे भी हैं. PSX में हम काम कर रहे हैं मतलब AMC के साथ, फिक्स्ड इनकम बॉन्ड्स वगैरह के ETF भी हम इंट्रोड्यूस करवाएं. कमोडिटीज़ के भी ETF होते हैं. तो पाकिस्तान स्टॉक एक्सचेंज पे इस वक्त 4 ETFs ऑलरेडी लिस्टेड हैं, जो चारों के चारों एक्विटीज़ के ETF हैं. और JS has brought a very different sort of blend in those ETFs के एक एक्टिव स्ट्रेटजी लेके आए हैं. और ETF is a product of asset management companies जैसे JS हैं. तो PSX का जो रोल है यहाँ पे, उसको ट्रेडिंग के लिए फैसिलिटेट करना. हम इनकी इंडेक्स को इंडिपेंडेंटली मैनेज करेंगे और ये चीज़ें इंफॉर्मेशन सारी मार्केट को प्रोवाइड करेंगे. आप अभी भी DPS पे जाएं, dps.psx.com.pk पे, वहाँ पे ऊपर आप ETF लिखें, आपको चारों ETF आ जाएंगे. किसी पे भी आप क्लिक करेंगे तो आपको उसकी पेज खोलेगा और एंड देन यू कैन सी के बिड और आस्क वहाँ पे अवेलेबल है और प्राइस अवेलेबल है. इंडिकेटिव NAV INAV अवेलेबल है. इंडिकेटिव NAV एक फिनोमिना है जो म्यूचुअल फंड्स में या क्लोज्ड एंड जो फंड्स ट्रेड होते हैं उनमें नहीं पाया जाता. कि ड्यूरिंग द डे अगर आप देखना चाहते हैं कि अप्रोक्सीमेटली इस वक्त फंड की क्या वैल्यू हो सकती है बेस्ड ऑन एग्जिस्टिंग मार्केट प्राइसेस, तो वहाँ आपको ये नज़र आएगा कि फॉर एग्जांपल इफ यस्टरडे NAV वाज 10 रुपीज़, आज इस वक्त मार्केट ऊपर गई है तो ये 10 रुपए 15 पैसे 20 पैसे इसकी इंडिकेटिव NAV है. मार्केट नीचे गई है तो आपको नज़र आ जाएगा कि ये 9 रुपए 70 पैसे है जो भी उसकी है. तो आप अकॉर्डिंगली अपना बिड और आस्क को उसमें डाल सकते हैं. बड़ा इंपॉर्टेंट फैक्टर है ETFs के अंदर वो लिक्विडिटी का है. लिक्विडिटी को जनरली अगर आप देखते हैं वो कि कितनी इसमें ट्रांजैक्शन हो रही हैं, कितना वॉल्यूम है, ये एक पैरामीटर है लिक्विडिटी को देखने का। एक और पैरामीटर जो ज़्यादा एप्लीकेबल है, ज़्यादा अप्रोप्रिएट है फॉर ईटीएफ्स टू सी टू अंडरस्टैंड कि एक मार्केट मेकर वहाँ पे मौजूद है। मार्केट मेकर अभी हमारे पास 3 तक मार्केट मेकर्स हैं पाकिस्तान स्टॉक एक्सचेंज में जो मुख्तलिफ ईटीएफ्स को लिक्विडिटी प्रोवाइड करते हैं। तो मे बी आपको वॉल्यूम नज़र नहीं आए समटाइम्स, लेकिन आपको बिड और आस्क नज़र आएगी। तो बिड और आस्क का मतलब है कि एक मार्केट मेकर या कोई एग्जिस्टिंग इन्वेस्टर वहाँ मौजूद है जो आप इफ़ यू वांट टू बाय वो आपको बेचेगा और इफ़ यू वांट टू सेल वो आपसे खरीदेगा। तो लिक्विडिटी एक बड़ी इंपॉर्टेंट एलिमेंट है जिसके लिए पाकिस्तान स्टॉक एक्सचेंज ने काफ़ी काम किया और ब्रोकर्स के साथ, और अब ये लिक्विडिटी ईटीएफ्स में अवेलेबल है। और बाकी जो बेनिफिट्स हैं ईटीएफ्स के इन जनरल, आपके पास एक प्रोडक्ट है, एक पोर्टफोलियो है, तो आपका एक डाइवर्सिफाइड हो जाता है रिस्क। तो इंस्टेड ऑफ पिकिंग वन स्टॉक द अदर स्टॉक, आप अगर एक ईटीएफ लेते हैं जिसकी स्ट्रेटजी को आपने समझा है, स्टडी किया है, और वो आपको वो पोर्टफोलियो का उस स्ट्रेटजी के ऊपर एक एक्सपोजर प्रोवाइड करेगा, रिटर्न रिस्क प्रोफाइल उसका एक पोर्टफोलियो का होगा इंस्टेड ऑफ वन स्टॉक। तो ये मुख्तलिफ चीज़ें हैं, हम लोगों ने अपने प्रीवियस वेबिनार्स में इस चीज़ को डिटेल से डिस्कस किया है। तो जो अवेयर नहीं है उनसे हम रिक्वेस्ट करेंगे कि वो ज़रूर कहीं भी मटेरियल पढ़ें, हमारे वेबिनार देख सकते हैं, इंटरनेट पे मटेरियल बहुत अवेलेबल है, वो उसको भी स्टडी कर सकते हैं। तो वी वुड अप्रिशिएट कि तमाम जो इन्वेस्टर्स हैं वो इन्फॉर्म्ड इन्वेस्टर्स में तब्दील हों और वो इन्फॉर्म्ड डिसीजन लें इन्वेस्टिंग का। तो ये डिस्कशन हमारी जो वो ईटीएफ्स के जनरल एज ए व्हीकल ऑफ इन्वेस्टमेंट है जो हम कर रहे हैं। बाकी जेएस ने बहुत अच्छा इंट्रोडक्शन अपना प्रेजेंट किया, ये एक स्ट्रेटजी है और बैक टेस्टिंग भी उन्होंने शेयर की है, पर बैक टेस्टिंग इज ऑन द प्रीवियस पीरियड्स, तो वो फ्यूचर में कैसे परफॉर्म करेगा वो विल सी व्हेन इट्स लॉन्च्ड इंशाल्लाह। सो ऑल द बेस्ट टू जेएस, और अगर कोई क्वेश्चन हो फ्रॉम पाकिस्तान स्टॉक एक्सचेंज from ETF perspective, so we are here to take your question as well. Thank you very much. Thank you, JS. Thank you.
Thank you, Hassan. We'll be taking the questions now. So if you guys have any questions, just drop a message in the chat box and we'll address your questions.
So we already have a few questions that have come in. So I'll just start with them in order. The first one is by Mr. Abdul Ghaffar. He's asked on the estimated transaction cost due to monthly rebalancing. Shahid, would you like to take this one?
Yeah, so the total expense ratio for the ETF would be capped at 2.5%, out of which our management fee could range from 0.5 to 1.5%. So you could say that in terms of total transaction cost is obviously not very easy to determine because it depends on how many stocks are actually being added and deleted every month. So we can't really say how momentum would do in the future. But what you should keep in mind is for now it's capped at 2.5%, so it will not exceed that number.
Yeah, and I'd just like to add into this that when we did the back test, what we've noticed is that you can distinguish the rebalancing between 2 time periods. So generally, when the market tends to be flat, you generally tend to have rebalancings where you have more stocks that are switched month to month, because generally you need to have performance in stocks that is quite variable. In comparison to that, when the market generally goes up, you generally have a few sectors that tend to do really well. So these would generally be sectors with high earnings growth or of that sort. Generally, in those cases, you have 4 to 5 stocks that are generally switched. So the transaction costs in those time period will generally be less. So there's a 2.5% cap on ETF expense ratio. So we intend to stay within those limits. I'd just also like to add on that we mentioned earlier that the ETF is essentially going to be low cost. So currently, if you look at equity funds in the market, they generally have expense ratios ranging from 3 to 4%. So relative to that, the ETF is obviously low cost. If you look at ETFs internationally, the expense ratios tend to be much lower. So the main hindrance in achieving that is obviously that if you look at the fees that are charged by brokerage firms in Pakistan as well, compared to the international standard, those tend to be higher. Obviously, because we're still a developing market, and those markets have seen much more consolidation on the brokerage end as well. And in many cases, even brokerages charge zero fees on transactions. So you will see a gradual, I would say, move towards lower expense ratios overall, but that is something that would take quite a bit of time. It would happen over years rather than months. The second question we have is from Mr. Azam Yahya regarding the maximum drawdown of the strategy. What I understand is that you're asking what the most negative return is for the ETF. So just to highlight that there are basically 2 time periods where the ETF has been quite negative. So one of those would be basically 2008 when you had the financial crisis. At that point, the ETF was down 34%, while the KC All Share was down 26%. Similarly, you have the market going down around 23% during COVID, and the ETF was down around 23-24% as well. So the maximum drawdown is significant, but obviously that is relative to the crisis as well. I mean, you only had the global financial crisis once, and COVID itself has been, a one-time thing. So those are areas where you have had large drawdowns, but generally the drawdown relative to the index is around 3 to 4%. So you generally tend to have 3 to 4% underperformance in some months, and when you have outperformance, that tends to be much larger. So the lesson I would take from that is this is a strategy where you would have to be invested for some time period to enjoy the gains and ensure that you benefit from the returns when they do actually come. The next question we have is from Syed Shadab Suhail on which shares are included in the ETF basket. So the ETF basket is basically going to be updated as of the 5th working day of each month. So for the current month, the new basket will be available on the BSX website on Friday, which is basically the 7th. So I can't allude to exactly what the basket will be since it's not yet public. However, what I would like to add is that, as we mentioned the strategy, what we generally are looking for are shares that have high price momentum and liquidity. So generally, during each market time period, you tend to have certain stocks that tend to do well, whether it is tech or steel or even like E&Ps, fertilizers. So generally, stocks that are held in the ETF match those themes. So you'll see back in 2012, 13, and 14, you would have an ETF that is composed of fertilizer and E&P stocks, and more recently after COVID, you would have an ETF that is composed of steel, cements, and technology shares. So that would give you a rough idea of what the ETF allocation is likely to be. The next question is from Mr. Suleiman Khalid. He's asked on whether we have applied this strategy in any specific fund or SMA as of yet, and if the return was similar to what we are estimating for the future. We have not applied this strategy yet in any fund or SMA. This is a new strategy that we have worked out, and this is the first time we are implementing this strategy over here. But I would suggest that the backtests tend to be quite reliable because they're obviously based on actual prices, and the backtest results are actually quite sound. The only thing that the backtest does not incorporate is the expense ratio, which is 2.5%. So if you assume that the outperformance is around 6 and 6.5%, after the expense ratio is deducted, you would get outperformance of around 3 to 4%. I'd also like to add in over here that when we did the 20-year backtest, you generally have larger outperformance from 2010 to 2021 than you do from 2000 to 2010. So the final 10 years that we've backtested have higher outperformance. So the additional return that you're earning over that time period is also higher. And therefore, the return after expense ratio deduction will also be higher in that case. Just 1 second. Then there's another question by Azam Yahya on what day will the ETF be rebalanced. As I've answered already, the ETF will be rebalanced and reconstituted on the 5th working day of each month, whatever that is. There's another question from Mr. Asif Habib on the difference between our ETF and other ETFs in the market. So the ETFs that you generally have in the market at this time have sort of a passive index. The index methodology is obviously available, and based on that, you can see the sort of stocks that they hold. The main difference with this ETF is this is a smart beta ETF. So this gives you an element of active management for the investor without having to actually actively manage your funds. So you would have an ETF where the basket would be different every 30 months, and the basket actually depends upon how the market does and how individual stocks and sectors perform going forward. So you have an element of active management, and you can hope to outperform the KC All Share or the KC 30 or the KC 100 over the future by using this strategy. And you get that with a lower expense ratio as well compared to traditional mutual funds that are operating in Pakistan.
I think I'd like to add something more to this point. The difference, I think, as Savish explained, ours is much more dynamic, and the ones that are listed are static in nature. And what that allows you to benefit from changing dynamics as well. And a lot of people, I just want to clear one misconception, because there's a misconception that momentum is only random. But I think that's what we've come to the conclusion after looking at the data, that momentum is not completely random, and it is many times, more often than not, driven by fundamental factors or fundamental backing. So what our ETF essentially does against the other ETFs that are already listed is it gives you that dynamic benefit of being completely tracking the current, you could say the scenario of the market or the current liquidity of the market or the current situation of the economy and as well. So a lot of the stocks in our basket are stocks that are fundamentally sound, and I would say majority of them are very fundamentally sound or have fundamental stories going forward or have fundamental value. So I just wanted to clear that and just to explain it in a much more better way that we feel that having a dynamic strategy is more suited to our market rather than having a static one.
And just to add to that comment on momentum obviously can be random over a certain number of days, but when you practice the strategy over 20 years and you have a different set of stocks for each month, you generally tend to have results that are driven by fundamentals rather than random speculative movement in the market. So in that sense, the strategy does perform well, primarily because momentum does have persistence in the Pakistani stock market as well. And you've seen similar results for ETFs that have opened up internationally as well. Another thing I'd like to add over here is that if you look at the composition of the KC 100 or the other indices and how we compose them, they generally tend to be free float market cap based. So the idea is that the larger a company is on a free float basis, the larger weight it gets in the index, and that essentially determines your market performance. And we use that as a generic, you could say, indicator of how the market has done. So when we say, for example, that the market has performed 15% over the last 10 years, we're basically referring to that performance of that particular basket. But if you look at the index in terms of earnings growth, so generally earnings growth has been in at many times has been in stocks that tend to be a smaller market cap sizes and tend to have relatively lower weights in the index, as the index is mainly composed of banking, oil and gas, and fertilizer stocks. So by holding a fund which has a separate index than general indices, you can generally outperform the market as well, because that is generally where the earnings growth is coming from over a very long-term basis. There's another question from Shahzad Khalid on whether our there's another question from Azim Yahya on whether this is a long-short ETF. Just to clarify, this ETF is primarily a long ETF only. He's asked on why the ETF has done well during the March 2020 crash. I'd just like to add in that, as I explained on the question regarding drawdowns, the ETF actually did not do that well during the crash itself. I doubt any particular investment vehicle did, but the ETF basically performed well after the crash. So after the crash, when the market recovered by 30 or some percent, that's when the ETF actually outperformed. So what you see in the graph is the outperformance after the crash, basically. Then there's Hazad Khalil, who's asked on whether our ETF is better than other AMCs. I think only time can tell on whether that is the case. I can't comment on future performance.
I think it's of a completely different nature. So, I mean, it completely depends on your investment objective. We can't just objectively say
whether you want to hold a passive index or whether you want to hold an index that is more.
A lot of people do prefer that, and a lot of people prefer having a more dynamic exposure. So it's more dependent on your objectives. There's no objective. We can't objectively say if ours is better or theirs is better. Can overseas RDA entertain? Yes, I'm sure they can be, because it's just like any other stock. It'll be listed on the stock market. Just for example, you go and you can buy PSO right now, or you can buy HUBCO right now. Similarly, you will just have to search our ticker on the stock market on your trading terminal, and you can just how you normally buy a stock, that's how the transaction takes place. So yeah, you can.
Another question on which stocks constitute the ETF. As I've explained, that will be public information by the 5th working day, which is going to be the 7th of this month. There's another question by Sanan Akil on how is momentum-based index different from the JS Beta ETF.
Okay, so it's not different. It's essentially the same thing. Beta is a strategy. Momentum is the factor. So the strategy is called Smart Beta, and in that strategy we have different factors, and the factor that we've chosen is momentum. So don't get confused in between the terminologies. It's essentially the same thing.
Yeah, so one example of explaining this would be that if you were to hold Lucky Cement, you would generally count that as cement exposure. But if you actually look at the factors that drive its stock price, you would have cement prices, cement volumes. You would also have auto volumes. You would also have the ROEs on obviously the power generation side, what the circular debt situation is. So you have multiple factors that basically drive its stock price. It's not just a cement stock. So the idea with factor investing in general is that you are looking at the underlying characteristics that drive stock price performance, rather than traditional sector alignments of stocks. That's basically the idea behind the ETF. There's another question by Uzair Ahmed on how many stocks will be taken in the ETF. The ETF will essentially hold 10 stocks. So you would take the KC All Share Index, shortlist it, compute a momentum score, and then choose the top 10 stocks from within that to hold in the ETF. All right, there's another question from Sanan Akil that the outperformance from 2001 to 2011 was flat as shown in one of the graphs, and then the outperformance after that actually escalated. Okay, so there's a bit of an issue with the graph because the outperformance is huge on a 20-year basis. What you're essentially seeing is that the first 10 years the ETF is flat, when that is actually not the case. So I'll just share what the fiscal year returns are for the index. All right, so these are basically the calendar fiscal year returns for the backtested strategy that we have run. So as you can see, there is significant outperformance in years where I've highlighted them in green. So you have outperformance in 2004 and 2005, where the ETF strategy has gone up by 45% and 117% respectively, while the KC All Share has gone up by 39% and 65% respectively. Similarly, outperformance in 2007, 2009, and 2011. So there have been years where you have not had outperformance. That is primarily 2012, 13, 2010. The market was more or less flat. But prior to that, when the market was doing well, you actually have had outperformance. And just on a fiscal year basis, you can see a similar result, where you have had outperformance over fiscal years 6, 7, and 8, and even 2003. While in some years you have had underperformance. So there has actually been outperformance. It's just that you're not visually seeing that in the graph.
Right. How is it different from? So Akhtar Munir is asking how is it different from any mutual fund. So mutual funds are the first major difference is that ETFs are essentially just like any other security that is listed on the stock exchange. It is just like a share. It is just like a share of any other company, except the share of a company is backed by the revenue or the earnings or the assets that the company holds, whereas an ETF is backed by the basket of stocks. So सबसे पहली चीज़ तो ये डिफरेंट आ जाती है. बाकी म्यूचुअल फंड जो है एक एक्टिव म्यूचुअल फंड में पहली चीज़ मैनेजमेंट फीस हायर होती है कंपेयर टू एक ETF में मैनेजमेंट फीस कम रहती हैं जनरली. और आई थिंक मेन डिफरेंसेस यही हैं. इसमें ज़्यादा थोड़ी कॉन्सेंट्रेटेड स्ट्रैटेजी होती है. म्यूचुअल फंड्स में हमने देखा है कि इंडेक्स को बेंचमार्क रख के ऑब्वियसली इंडेक्स ट्रैकिंग का एक ज़्यादा एलिमेंट होता है. जो हमारा ETF है उसमें वो एलिमेंट बिल्कुल भी नहीं है. वो एक बिल्कुल ही मोमेंटम के हिसाब से चलेगा. सो आई वुड से ये सबसे तीन बड़े डिफरेंसेस हैं म्यूचुअल फंड और ETF में. सबसे बड़ा तो आई वुड से अगेन यही है कि आपके पास अगर ब्रोकरेज अकाउंट है, आप अभी जाके खरीद सकते हैं ETF हमारा विद इन द नेक्स्ट 1 मिनट, और उसके अगले मिनट आप बेच भी सकते हैं. Whereas म्यूचुअल फंड में obviously there is a more rigorous process where you have to go through a set of documentation process as well. So yeah.
Yeah, and then Abdul Ghaffar Murthy has asked on when the fund documents and presentation will be made available on the website. So those documents are, I believe, already available on the website.
They're available on the website?
You can access them.
They're available on Facebook. Okay, so they're available on our Facebook page. You can go there and access them. And he is asking, can you also share back test with KC30? Besides KC all?
I guess add to this that the KC30 backtest is basically similar. So the return for the ETF is obviously the same. It's just that we're comparing it to a different benchmark. And the ETF has outperformed the KC30, KC All Share, and the KC100 on that time period. So generally, if you look at the performance of the three indices on a 1-month basis or 2-month basis, at times they can have significant differences. So let's say banking stocks do well a particular month, the KC30 does significantly better. But when you look at it over a 10-20 year horizon, those differences aren't really that large. So generally, the performance is similar.
So the third question is, what's the cap at the individual stock? Well, basically, he's asking the stock limit.
Yeah, so the stock limit is essentially 20%. So that's the maximum that you can hold a single stock. So there may be a situation where you have a stock that is 20% in the index, and then the extra weight in that stock is basically distributed amongst other stocks. So let's say based upon our strategy, a particular stock has a very high rating, and the weight that comes out is actually larger than 20%. What we'll do is we'll cap it at 20% and pro rata distribute that weight into the remaining 9 stocks.
So Arif Khan asks, what is the formula used to calculate momentum? I think we've explained this, but we can just briefly
explain the formula used to calculate momentum. I'll just briefly go over it again. So the starting point is the KC All-Share Index. You would then apply a market cap and trade value filter on a biannual basis to determine a shortlisted number of stocks that you would use for calculating the momentum score. So the idea with this is that you're trying to avoid stocks that have a low market cap or are thinly traded, because that would lead to a tracking error in the fund as well. And following that, what you would do is you would calculate a momentum score for those shortlisted stocks. This would basically incorporate measures of traded value and price performance. And based upon that, the top 10 stocks would be selected in the index. So that is basically the formula for calculating momentum.
Nabil Siddiqui asks, do we get payouts on each month? As you said, rebalancing will be on 5th day of every month.
I don't believe there are payouts every month.
No, they're not.
Yeah. Then there is a question on CY20 performance of the strategy by Azam Yahya. So for CY20, the ETF performed around 55%, whereas the performance for the KC All Share was 4%. Yeah. Okay, there's another question by Sulaiman Khalid. He asked that with a small amount of capital, catching momentum is easy, but with larger capital, it is not that easy. And how do we intend to manage momentum with large capital? So the idea basically is that we're trying to build an index that has momentum, but also is liquid in nature. That is why when we calculate the momentum score, we're incorporating traded value within that metric as well. So you generally select stocks that tend to do well and also at the same time have high traded value. So by ensuring that and having a fairly liquid index, you can capture momentum on a larger size as well. We believe this ETF will still function at, let's say, a PKR 1 billion size. Obviously, we understand that it can't function at a size that is much larger, let's say PKR 3 billion to 5 billion. But at this point in time, generally the ETF AUMs are, I think, quite far from what conventional equity fund AUMs are like. So at this point, we think 1 billion is a good target to have. Then there's another question by Azam Yahya on whether the momentum is calculated using Jagadish and Titman 1993. I'd just like to clarify that the calculation of the momentum score is our own proprietary formula, and that is not based on any particular research paper. Finally, there's another question by Imran Ahmed on whether the ETF is Sharia compliant. The ETF is basically using the KC All Share as its base, which in itself is not Sharia compliant, so I'm afraid the ETF is not Sharia compliant.
Yeah, which ETFs are already registered with the PSX? So there are, I think there are four or five ETFs registered. So UBL, Mizan, all of these, a lot of AMCs do have ETFs registered with the PSX, and this would be different from others. This would be different from others. We mentioned this before. The ETF that we're intending to launch is more dynamic, whereas the ones already listed are more static in nature. So you get the benefit of active investments and passive investments through our ETF. There is an element of there is a major element of active investments and active rebalancing of the portfolios. And I think whereas the other ETFs, the rebalancing or the reconstitution is not very frequent. So that is the major difference between the two ETFs.
So if anyone has any further questions, you can please ask them now.
What is the expected turnover?
There's another question by Sanan Akil on the
expected
turnover of the JS ETF. I believe by this you mean what the reconstitution frequency is. So essentially you'll be reconstituting on a 30-day basis, and you will have 10 stocks in the ETF. And generally what we see is that on average, 5 to 6 stocks within that are turned over. So the turnover is around 50% of the ETF.
In terms of volume, okay. So I mean, we can't comment on that because we don't determine volume. Volume is dependent on investor interest. So I mean, if investors are interested and investors want to buy our shares, then there is no limit for the turnover. So we can't comment on that.
Regarding the month, there's another question by Azam Yahya on the monthly list of stocks in the backtest. I'll have to check if we can make the backtest available, but I'll just get back to you on that, and if it is possible, obviously we'll upload that on our website.
There's a question: what will be max spread, min spread of price? I'm sorry, I don't get your question. Can you just elaborate on that a bit, Akil Abdul Razak? Sorry.
I think this question is about the spread on prices. So at which spread bid and ask will be available. So it is part of how the market behaves. So in case of many investors coming in, it will be smaller. If you look at the bid and ask spread right now of existing ETFs, you may find it from 0.5% to 1.8%, 1.9%. So it depends on the liquidity at that point in time. So thank you.
All right.
So we have one final question from, I think, Sanan Akil on, he's mentioned that his concern is that the 4 ETFs that are currently listed are quite illiquid, and 3 of them have actually not traded today. And so his question is regarding the liquidity of the ETF. The only thing I'd like to add over here is that, as we've mentioned, the ETF strategy that we are using is actually quite different from the ETFs that are currently listed, in the sense that this is a smart beta ETF and it gives you an element of active management. So we believe that the index will be relatively more attractive for the investors, as it will be changed every month, and you'll have a more diverse allocation as well within the ETF. So I think that should definitely help in terms of liquidity. And the liquidity, of course, also depends upon the performance of the ETF. So we've all shown you the backtest, but you can only take backtest at at so much as face value. You'll actually have to see how the ETF performs over the coming few months to actually determine on whether this is an attractive product. We believe it will be so. So I think if the performance comes, then definitely liquidity should not be an issue.
If you allow me to add a few comments on this. This is Sanan Akil question on liquidity. So yes, if you look at the liquidity from perspective of volume traded, so it appears that some of the ETFs are not that liquid. But as I mentioned earlier, the liquidity in case of ETFs, if you want to look at it, look at bid and ask. It will be available almost all the day, and a market maker is standing behind. Sometimes people do not buy ETF for trading purposes, like in case of some stocks, speculative stocks, people buy and sell during the day. Sometimes people buy ETF to hold on to the ETFs. So as an investment. So in case of ETFs, there is a market maker. Actually, there are 3 market makers for a few of the ETFs. They are available in the market. If you want to buy and sell, just go to the page of DPS, look at the bid and ask. If it is available, look at the spread. If that makes sense, you can buy and sell on the stock market. So this is a little bit different from an individual stock where there is no market maker, as compared to ETF where there are market makers and there will be a liquidity available as per the market conditions. Thank you.
All right, so I believe we've answered everybody's questions. If there are any further questions, at jsile.com, and Shavi, can you take this on?
Okay, so there's a question from Akil Abdul Razak. What will happen if ETF wants stock cap or floor during trading time? Okay, so let's say during the day of rebalancing. I'm assuming that's your question. And we want to buy a specific stock and it caps. Then obviously we will be very vigilant with our execution. We will make sure that never happens. But if that does, then there will be a phenomena called a tracking error for that particular day, a tracking error to our index. And as soon as the stock starts trading again, if it's during the day or even if it's the next day, we will rebalance our portfolio according to the index.
Also, I'd just like to add in that the market maker obviously operates for all the ETFs, and they do not generally market make during times when one individual stock is at a cap or a floor. So that is obviously one downside to the ETFs. However, I'd just like to add in that once you have sufficient size in the ETF and liquidity, this downside actually goes away, because even if one individual stock is at a cap or a floor, you'll still be publishing an INAV for the ETF. So it is still possible for individual market participants to trade in that ETF. So if someone wishes to sell an ETF, they can do so. Yeah, so you'd like to add something in?
Yeah, I just like to add, as you mentioned, from a fund management perspective, if you want to rebalance and stock is not available due to lock, sub buy or sell, so your rebalancing exercise may be a little bit extended. So that may be a cause of tracking error. But there is a, and you rightly mentioned, the market makers are not forced to make a market during a time when stocks are cap or floor. So market making is a business activity, commercial activity. But I would like to, mention that buyers and sellers can keep on buying and selling ETF during that time. And there is a positive side, there is a silver lining. For example, there is a stock in ETF which is upper locked. So upper locked means that you cannot buy the stock, and it is 10% of the ETF. And considering the other stocks being neutral, if you don't have a view on the other stock, you can buy the ETF. While you cannot buy the stock, you can buy the ETF based on if somebody is selling. So the price discovery mechanism, you can take an exposure of a stock which is locked, but you cannot buy it directly, but you can buy it through ETF. So there is a positive side to providing ETFs in a traded manner, that is a listed fund, a listed portfolio. So I think that answers the question. Thank you.
Yeah, just like to close with a final remark that on this question, I'd just like to add in that our aim with the ETF and the smart beta strategy is to provide a product that basically generates value for the individual investor as well. And in doing that, obviously, we've come with a strategy that we think will outperform over the future, and the outperformance can be significant. So the idea with that is that if the strategy actually does well, we expect that the ETF will have larger AUMs and obviously be more liquid. So we don't intend to rely on the market maker in the very long term, because obviously we would want that you have a larger size and you have individual market participants that transact in the ETF. And at that point, obviously, you should not have this issue. I think that's pretty much it from our side. Mr. Hassan, if you'd just like to add anything else, and then I think we'll close the session.
No, thank you very much. You have also shared your email, and info@tsx.com is also available. So if any questions, please feel free to send us the email, and we'll get back to you on that.
All right, perfect.
Learning never ends. या सो आप ज़रूर प्रीवियस वेबिनार्स भी देखें और स्टडी भी करें ETF के फिनोमेना को. And I think there is one more question coming in for, is the management fee and transaction fee different? I think you can answer that. Yeah, they are different.
As in the management fee and transaction fee is different. Management fee is what the AMC keeps, and transaction fee is what the broker keeps, basically. So it is different, yes. But and that totals to an expense ratio, which is capped at 2.5%.
All right, so on that note, we'll end the session. Just to remind you, if you have any further questions, you can email at ir@jsl.com and we'll get back to you on that. And then thank you so much to everyone for coming in. I think that's it. Leave.
Thank you. Allah Hafiz.
Thank you very much. Allah Hafiz. Thank you.